Starting your investment journey with just $100 might seem like a small step, but it can be a powerful move toward building long-term wealth. You don't need thousands of dollars or years of experience to begin, just a willingness to learn, a bit of patience, and a commitment to growing your financial future. The key is to start smart, make informed choices, and understand that even modest investments can compound into significant gains over time. So, how do you turn that $100 into the foundation for your financial goals? First, let's talk about mindset. Investing is more than just putting money into stocks or funds. It's about shifting your perspective from instant gratification to long-term growth. With $100, you won't get rich overnight, but you will learn valuable lessons. Think of this first investment as a way to educate yourself, test your discipline, and watch your money begin to work for you. Before you invest, make sure your financial basics are covered. If you have high-interest debt or no emergency savings, consider tackling those first. But if your finances are stable and you're ready to grow your money, let's explore the options available to you. One of the easiest ways to start investing is by opening an account with an online brokerage or a financial app. Today, many platforms have eliminated account minimums and offer fractional shares, meaning you don't need to buy a whole share of a company. You can buy just a piece. This is perfect for small budgets. Look for a brokerage that charges little to no fees, is user-friendly, and provides educational resources. Some popular options include Robinhood, Fidelity, Charles Schwab, and E-Trade, but do your research and pick one that aligns with your needs. With your account set up, you'll need to decide where to invest your $100. Stocks are a popular choice, but they come with risk. Instead of betting everything on one company, consider exchange-traded funds, or ETFs. These funds pool money from many investors to buy a wide range of stocks or bonds, giving you instant diversification. For example, an S&P 500 ETF lets you own a piece of 500 of the largest companies in the US, reducing the risk of losing money due to one company's poor performance. Most ETFs have low fees, which means more of your money stays invested. You might also consider investing in mutual funds, which are similar to ETFs, but may require higher minimum investments. With $100, ETFs and fractional shares are usually more accessible. Some platforms even offer automated investing through robo-advisors. These digital tools help you build a diversified portfolio based on your risk tolerance, goals, and timeline, then automatically rebalance it as needed. They're ideal for beginners who want a hands-off approach. If you're comfortable with a bit more risk and want to learn how the market works, you can buy individual stocks. Focus on companies you know and believe in, and do your homework before investing. Read up on their financials, growth prospects, and recent news. Remember, investing in individual stocks is more volatile, so never put all your eggs in one basket. Another option is starting a retirement account, like a Roth IRA if you qualify. Some providers let you open an account with no minimum and contribute small amounts regularly. While $100 won't seem like much today, regular contributions, even small ones, can add up over decades thanks to compound interest and market growth. Plus, Roth IRAs offer tax benefits that can help your money grow faster. Cryptocurrency is another avenue some investors explore. Platforms like Coinbase and Gemini allow you to buy fractions of digital currencies like Bitcoin or Ethereum. Cryptos can be highly volatile, so only invest what you can afford to lose and make sure you understand the risks involved. No matter where you invest, keep your fees low. Every dollar spent on commissions or management fees eats into your returns. Look for brokers and funds with transparent, low-cost structures. Many platforms now offer zero-commission trades and free account management, making it easier for small investors to get started. Diversification is crucial when you're starting out. By spreading your $100 across a few different investments, say a mix of an ETF, a stock, and a bit of crypto, you reduce the risk of losing everything if one investment performs poorly. As your portfolio grows, you can rebalance and refine your strategy. Education is your most powerful tool. Read books, follow reputable financial websites, and listen to podcasts about investing basics. Learn about market cycles, the importance of patience, and how to avoid emotional decisions like panic selling when prices drop. The more you know, the more confident you'll become. Set realistic goals. With $100, you won't double your money overnight, but you can set benchmarks. Maybe you want to grow your investment by 5% in the first year, or add $25 each month to your account. Small, consistent contributions are the secret to building wealth. Automate your investing if possible, so you don't have to remember to transfer money. Let technology do the work for you. Track your progress. Most investment platforms offer dashboards that show your gains, losses, and overall performance. Don't obsess over daily fluctuations. Instead, check in periodically to see how you're doing. Celebrate small wins and use setbacks as learning opportunities. Be patient. Markets rise and fall, sometimes dramatically. The most successful investors stay calm during downturns and avoid the temptation to sell at a loss. Instead, see market dips as a chance to buy more at lower prices. Over time, the market has historically trended upward, rewarding those who stay invested. As your confidence grows and you learn more, you'll find ways to increase your contributions. Maybe you set aside a portion of each paycheck or use windfalls like tax refunds to boost your investments. The earlier you start and the more consistent you are, the greater your potential for long-term growth. Remember, investing is a journey, not a destination. Starting with $100 is a meaningful first step, and every dollar you invest today is working for your future. Whether you choose stocks, ETFs, robo-advisors, or even a bit of crypto, the important thing is to begin. Educate yourself, stay disciplined, and focus on your long-term goals. Over time, those small investments will grow, compounding into a brighter financial future. So, take that $100 and make it count. Open your account, choose your investments wisely, and commit to learning as you go. The road to wealth starts with a single step, and you've just taken it. If you found the video helpful, be sure to like, comment, and subscribe.